Hello and welcome to another Smaulgld live stream. It's Sunday night, October 28th, 2018. And tonight we're going to do a crypto overview, and we're going to talk about a company called Bakkt, that's B-A-K-K-T, and why that is important, the upcoming launch. We're also going to go through the lay of the land for Bitcoin ETFs and why that's important. And then we're also going to talk about overall Wall Street involvement and interest in cryptocurrencies. Before we do that, let's take a look at the cryptocurrency prices. Bitcoin at 64.04 on Coinbase. That's pretty much flat. That is a operative term lately with the cryptocurrencies, especially Bitcoin, the last 2 months. Bitcoin Cash up just 0.45% at 436. Ethereum up 0.5% at 202. Litecoin at 51.53 up 0.21%, and Ethereum Classic pretty much unchanged at minus 0.21% at 9.53. Okay, so now what we're going to do is we're going to talk about cryptocurrencies. Now, some people who follow this channel have no interest in them, and other people know just enough to know what they need to know to be against them. I'm going to give you more information if you're interested. If you're not, you can tune off and come back tomorrow when we talk about gold and silver, the economy. But tonight, we're going to only talk about what's going on currently in the cryptocurrencies, and it's a good time to talk about them because they are basically, I wouldn't say out of favor, but the pumpers have left them alone. They've gone away, lower prices chased them away. They're not pumping these stories, and there's a lot of significant stories going on. They don't relate to the price, but I do often see that generally pumping stories are based on cherry-picked facts or untruths, and they're better off pumping those things. What I'm going to tell you about tonight are things that are actually happening and just are not getting the pump, and nor do I intend to pump them. I do intend to show you what's been happening the last few years in cryptocurrencies and why Wall Street is interested in what they are doing to get themselves into this business. Why do they want to get into this business? Well, first of all, they like to do trading. They are not involved at all in the trading platforms. Fidelity, TD Ameritrade, all the major stock houses are not trading cryptocurrencies. So the trading revenue is going to upstarts like Coinbase, Binance, and all these other online trading platforms. So Wall Street is missing out on the trading platform revenue. IPOs, well, ICOs in 2017 outpaced by nearly 5 to 1 the amount in dollar amount of capital raised. ICOs raised over $4 billion. IPOs, initial public offerings, raised only about $750 million. Wall Street makes fees off of IPOs, bringing them public. Lawyers, accountants make money preparing the registration statements to bring them public. Silicon Valley looks to IPOs, the venture capitalists, because that's their quote exit strategy. They provide the company with the seed money, and then it comes out in the IPO. Well, you're not getting that money. The Securities Exchange Commission has already set up a page, sec.gov/ICO, encouraging companies to bring forward their ideas so that they can be brought through the system, reviewed by the SEC for proper disclosures. Now, we saw in 2017 especially, you had a lot of people you might consider knuckleheads promoting ICOs. People with YouTube channels, celebrities, all big money flowing in. Well, meanwhile, the quote professionals on Wall Street weren't getting a dime of it. So they want in on this. Now, why does the SEC want on this? Well, ostensibly, they're there for consumer protection. They're there to make sure that the proper disclosures are provided to the public so they can make informed investment decisions. Well, also the SEC gets fees to review the registration statements. They make very large fees. It funds the operation. SEC also gets fines for people who don't comply. So the SEC works with bankers, Wall Street bankers and lawyers and Silicon Valley investor types. They all have the same vested interest. There's a lot of money in IPOs. There's a lot of money in reviewing and preparing registration statements, accountants, lawyers, bankers, and the like. And clearly they want to bring that to the ICO business, get them all registered, go after the people that are pumping them on YouTube channels, and make sure that they get control over ICOs. And this has nothing to do with Bitcoin. This is just a company or an idea that they want to issue tokens. The SEC wants them to go through this process, and clearly Silicon Valley and Wall Street want the same. So you've got trading fees they've lost. You've got ICO fees that they've lost. There's other products and services besides just trading, buying, and selling. There's also proprietary trading. They missed out on the big run-up. They didn't make any money trading Bitcoin, Litecoin, and all the others, so they didn't have their own proprietary trading. Forget the trading fees they make for customers, but they missed out on their own proprietary trading. 401ks, custodial fees to store cryptocurrencies. They're not getting that either. The other thing that they're interested in is, besides custody, is they want to issue ETFs. ETFs are a $3 trillion business, and we're going to talk about ProShares, Direction, Van Eck, Granite Shares, companies that just those 4 companies have, let's see, 46, 36, over $100 billion of assets under management, and they want to do ETFs. So there's a lot of companies angling to get the trading fees. They want the ETF fees. They want the ICO fees. They basically want the custodial fees. And one last thing they also want are payment fees. Payment fees are huge. Fees of transactions are probably $25 trillion. That's why companies like PayPal and other payment processors are so lucrative and so valuable to the ecosystem. They want in on the ability to potentially migrate cryptocurrencies or integrate them into current payment processing, or to somehow capture a piece of. Now, this all goes antithetical to the idea that this is just a peer-to-peer trading system. You don't need banks. They will find a way to layer it in, either because of regulation is required or something. They want in on the payment processing as well. Now, this has been one of my theories all along, that there's 2 views on cryptocurrencies. One are the people that just say they're against them, they're a plot, mark of the beast, whatever they want to criticize it and just say you don't hold it, you don't own it, all crypto's to zero. That's one. They're going to arrest everybody. And then the other side is that this is the biggest revolution on earth, and everyone's going to become their own central banker, and banks are going to go by the wayside, everyone's going to go away, and everyone's going to trade amongst themselves without middlemen. Well, I say wrong on both counts. It's not going to be made illegal. It's not going to be shut down. It's not going to go to zero. And it's also, it may provide for some that level of freedom, but for the most part, I believe cryptocurrencies that exist today and that will be issued in the future will all be issued within the central banking system. And I don't mean central banks. I mean within the current banking and payment system under the current regulations that they'll update for crypto, SEC, CFTC for futures, and basically they'll try to get as much of this money into the legalized, regulated system as possible, and that'll make the bankers happy, the lawyers happy, the accountants happy, the regulators happy, and anyone who's involved in that food chain, Silicon Valley, venture capitalists, and so on. Now, there will be people who, and a lot of these cryptocurrencies will serve the purpose for privacy. They'll be outside the system. There'll still be money laundering. There'll still be tax evasion and so on. But for the most part, I think most of this stuff will end up, and this is the goal of Wall Street, is no different than when you buy an Apple stock. Yes, they track it, they trace it, and you pay tax on it. Well, it'll be no different than if you buy the latest ICO company with no earnings, DAO that you just buy because it's supposed to go up, and Wall Street sells it to you because it's the latest and greatest and most cryptoist thing you've ever seen. It's got the most blockchain you've ever seen. And they release those, and the SEC signs off on them. They don't technically sign off on them. They say it's illegal to say that. But they review the prospectus, and everyone makes their money, and they go higher. Tesla coin, whatever it is. They'll be not just Bitcoin, Litecoin, and the current coins, but all the ICOs that come with it. So that's what I think Wall Street wants, and generally, as you know, when it comes to bailouts and things like that, Wall Street gets what Wall Street wants. And it actually makes a lot of sense that that'll give the regulators, there'll be a lot of money being made by all the money people. And then the regulators will also have bigger budgets now to go after the money launderers, people using cryptocurrencies for criminal acts, tax evasion, and the like. Let's start with Bakkt. Now, what is Bakkt? Well, Bakkt wants a piece of all this action. And you say, well, who are they to want this action? How are they going to get it? Well, Bakkt is backed by or owned by the following. ICE, which owns the New York Stock Exchange, Microsoft, Starbucks, and the Boston Consulting Group. And they have a very, very ambitious objective. They want to create this global network, this is from their website, that will enable you to buy, sell, store, and spend digital assets simply, safely, and efficiently. Now think about where that's headed. Buying and selling, well, that's their trading fees. Storing, well, that's their custodial fees. Spending, well, that's the payment system. So now they got all bases covered right there. That's why Starbucks is there. Starbucks doesn't want to, quote, accept Bitcoin. They want to make it so that those hundreds of billions of dollars worth of cryptocurrencies can be easily spent at Starbucks and everywhere else. They have to convert them into fiat. They'll convert them into fiat. Now you say, well, that's not good because cryptocurrencies are meant to be peer-to-peer. They don't care. And for the most part, most people don't care. If they have something that looks new and it works fast and they can get online with it, they can buy it, it can go up in value, and they can spend it at Starbucks, they don't need to know that it's not going directly to Starbucks as Bitcoin and there's a transaction fee. They're used to all that stuff. And the same with, they're going to buy it from their Schwab account or their TD or Ameritrade. We're getting into that. Or their Fidelity account. They're not going to worry that, oh, well, they're going to track that I bought Bitcoin. Yeah, the same way they track that you might have bought an Apple share or you might have bought one of the FANG stocks or Tesla or something else. And you're going to buy it. They're going to hold on to your Bitcoin. You say, oh, that's not good. The point is you want delivery. You want delivery. Yeah, you don't take delivery of your Apple shares, your FANG shares either. Now, some people, they insist on it, and they're a minority. People want to buy the gold ETF. They don't want to buy a gold shares. They want to have the gold in their hand. And there's people who are going to want to have the Bitcoin in their hand. But for the most part, as I mentioned, there's a $3 trillion ETF market already. Whatever's backing those ETFs, if anything, no one has a piece of them. All right, so what Bakkt intends to do is they want to also have a futures exchange, but they're physically settled. Now, last year we had the introduction of the CBOE and the CFTC approved Bitcoin futures, but they were cash settled. But let's take a look now, before we go into more of Bakkt, the price action of Bitcoin for the last year. Now, a lot of people who've always hated Bitcoin are jumping up and down to the fact that Bitcoin has, quote, crashed from $20,000 down to the current market price of around 62, 63, 6,400, depending on which exchange you're at. But if you look at the chart, the price has been over $6,000 for over a year, pretty much a full year. Now, that's a pretty big achievement. And you can see in February, it actually bottomed out at about $6,000 and has basically bounced along that price for nearly 10 months. We're now almost in November, and the price is still just over $6,000. But if you look at what's happening the last, I think, since September, it hasn't hardly moved at all, making Bitcoin less volatile than stocks have been. Look at the gyrations we've seen on Wall Street, the gold and silver, the dollar, the oil, and so on. Bitcoin has been relatively stable. Now, I anticipate that it's stable. It's that stable because nothing is going on, really. There's no reason for it to go down, and there's no reason for it to go up because all this news that I'm talking about is still 30, 60, 80 days, 90 days away, and it may not happen in 30, 60, 90 days. It may happen sooner, we don't know. And when we talk about ETFs, we'll see that they may approve them as early as November 5th, or they may reject them. Bakkt may launch as early mid-December, or it may not get regulatory approval, and that'll push it into 2019, these initiatives. But I'm going to go through the initiative, but let's do Bakkt. So Bakkt, as we mentioned, what they're trying to do is build this open, seamless global network to enable you to buy, sell, store, and spend digital assets simply, safely, and efficiently. And remember, they're working with the companies involved are Microsoft. They'll probably store stuff in the cloud. They're working with the New York Stock Exchange, Starbucks, and Boston Consulting. They've been working on this for well over 2 years, and they're interested also in credit cards, and 401k. They basically want to take all of this stuff that's out there right now and bring it into the applicable regulatory environment, or even create the regulatory environment with the consultation with the U.S. regulators, and make these products no different than any other financial product. Now, again, that goes against Bitcoin is revolutionary. It's peer-to-peer. Well, they don't care about that. There's money to be made regulating it, and that's what they're trying to do. They want consumers and institutions. Now, remember, Wall Street hasn't participated. As I mentioned, they did not participate in that $4 billion ICO market in 2017. Their ICOs were lower. They also did not participate, and this is probably the first bubble ever in history, where Wall Street didn't create the bubble and participate in the upside, like the housing market or the .com market, whatever it was. You saw, now this is the 1 year chart you're looking at here, but you can see that price when it went from 5,000 to 20,000 just a year ago. Wall Street, there was no institution that was involved in gaining that big rise there. But interestingly enough, if you go back now to the 2 year chart, you can see when you look at the 2 year chart that, let's pull up, there it is. It hasn't come up yet for you, but there, okay. That the price just 2 years ago was under $1,000. So Bitcoin has gone from $1,000 to $6,000 in less than 2 years. It was actually under $1,000. And then you could see it made its ramp up. But the real ramp happened, it was gradually going up from early spring and summer to the fall, but it ramped up when they announced that they were going to do those futures. And basically the top in the Bitcoin market, you can see it up there, was around the time they launched the Bitcoin futures cash settled. Clearly, probably a lot of manipulation going on. But also clearly, Wall Street wants in on whatever upside there is to have on price, ICOs, trading, storage, 401ks, custodial, whatever it is, payment platforms, and so on. So you can see there that that's a big rise there. So people that are mocking Bitcoin and you know, I don't like pumpers, and they pump the stuff, but that's quite a pump. If you were able to buy at 1,000 and sell at 20, that is a 20 bagger. That's pretty good. If you bought at 5, you sold at 20, that's a 20 bagger. You know, if you bought in February at 6 and it's at 6,300, all right, so you haven't really lost much. So most of the people that have been buying lately, it looks like they're in accumulation phase. It's only the people that bought really between November and February, you can see that spot there, that really are out of the money. People who bought prior to that or after that, you know, they're probably in pretty good shape, and who knows if the price will ever go back up again, but you know, they haven't lost their shirts. The only people that lost their shirts are in the mania phase, and that wasn't very long. You can see it was basically from second week in November to maybe, I guess, early January, and then by February it was over. You know, bounced around after that, and a couple of dead cat bounces back up to 11, 12,000, but it's been pretty much down since, and it's effectively been, you know, $6,000 for most of the last 9-10 weeks. Okay, so that's a tier. But if you go even further back, and again, none of these gains were ever captured by Wall Street. Now, if you look at the one which is very interesting to me, which is why I think that these projects are major league projects, and have gone on irrespective of the price movement. If you go all the way back to 2014, you see that little bump up right there? That was huge. This is when I started learning about Bitcoin in 2013. Early in the year, people were talking about it, and I was like, what is this? Who cares? Yeah, okay, you do mining. It's digital. You don't see it, and somehow it's worth something. I don't think so. And then it rose, and it went from like $100, $200, went up to $1,000. It doesn't look like much, but that was as big of a deal. You know, it went up 12, 15 fold basically at the end of 2013. And then it slumped down by 2015. You know, it was no longer $1,000, $200, $300, $400. And it bounced along the bottom for the longest time, and then boom, went straight up. But what impressed me the most was, besides my distaste for the whole thing, was during that whole period of time, the Bitcoiners kept working on it. And they kept doing stuff, and all the innovations came. And it's the same thing here. What's happened was, because there was no regulation or even real framework, Wall Street companies didn't really start investing in ideas and so on. But clearly, they got around 2016, clearly by 2017, all of the major Wall Street houses had already started circling their plans to decide what they were going to do. Fidelity had long decided they wanted to get into cryptocurrency. They were testing it in their cafeteria in 2016. In 2017 early, they said they had integrated their trading platform interface, not their trading platform, but their interface with Coinbase. They clearly look like they want to get into trading. They've decided they're going to do that. TD Ameritrade has decided they're going to get into that. So we're not going to get ahead of ourselves on what those companies are doing. The point being is that all this time here, you can see the big run up from a few cents to a few dollars to $1,000 to a few $100s to $20,000 back down to $6,000. None of the money that was made in here was made by Wall Street. And clearly, now that it's been around 10 years, the anniversary of the Satoshi white paper is coming up, I think tomorrow or this week, and then the launch of the Bitcoin itself in another couple of days. None of that 10-year period was Wall Street in any way involved. And they are, I believe, set to get involved in a big way. And I believe the reason they're getting into it is they've seen it's there. They can see that it can be a threat, but they also see they can make a fortune off of it. And I also think they're at the end game of their pumping the stock valuations. And I think ever since 1987, they've always had to have a new bubble to promote. And this one is an easy of a bubble to promote as any. And this current, most recent everything bubble is coming to a close. And here come cryptocurrencies. And now they could tell their clients, you know, the price is back down to 6,000. You didn't miss out on the run to 20,000. You know, we're going to run it up again, or whatever they're going to tell them. Again, this is my theory, not investment advice. This is just where I see it going. Okay, so what Bakkt wants to do is they want to set up this everything platform, and it only initially starts with Bitcoin, and eventually they're going to add other stuff, and it starts with, you know, trying to get a regulated environment where you can buy, sell, store, spend digital assets, hold on to them, secure, and issue futures, and then have those futures physically delivered. And that's what they want to do. Now, they don't have all the regulatory approvals in place, but you would have to think this isn't like the Winklevoss twins run at it the last two times since 2017 earlier this year. This is the New York Stock Exchange and Microsoft. They've got big time lawyers. And that ties into now the pending ETFs. The Winklevoss twins didn't get theirs. There's now 9 up for approval, and many people think it's not going to go through. And an ETF, clearly, just like Bakkt would, create additional demand for Bitcoin, because you're going to have them around to physically deliver for your futures. And if the people are buying and trading, there's got to be Bitcoin around. And if you have new customers that are now able to participate because it's regulated, you're an institution, if they're going to buy or sell Bitcoin on Bakkt, that's going to create additional demand for Bitcoin, and clearly ETFs have to be funded, and you have to fill them up with Bitcoin, and that would create additional demand. One would logically think that would raise the price, but I make no price predictions or no recommendations. But what's the problem with the ETFs has been, ever since they tried to put them forward, was the SEC rejected the original ones on the basis that the prices were all over the place. You couldn't trust the prices. They weren't happy with the custodial arrangements, and as we saw, Mt. Gox went boom. All the coins went gone. The liquidity wasn't there back then. You didn't have a lot of trading compared to the amount of trading you're having. Even though trading is down from that middle period where you've got that big spike, it's still higher than it was last year. So trading has improved, and they also want to make sure you have adequate liquidity. Investors can get their money back. And then the other real sticking point was, are there information sharing arrangements, regulated markets, so the SEC can check in and see what's going on in this market? Now, the original reason they nixed the ETFs, one of the main reasons was a few years ago that, I don't know, 70, 80, 90% of trading happened in China on unregulated exchange. And they're like, that's not going to work. We're not going to know what's going on there. Well, since then, a lot of this trading is, the Chinese exchanges have shut down, so there is no trading there. The trading has moved internationally to different exchanges. But what might give the SEC comfort on that score is approving Bakkt or Coinbase becoming an alternative trading platform, registered, or one of the Goldman Sachs investments in Poloniex, them becoming a registered alternative trading platform. We already have the Winklevoss twins, the Gemini, now having a stable coin that they have registered with the New York Financial Services Commission. You have Coinbase now is registered. Their custody now is registered with the, I think, again, in New York. So they're becoming, or having U.S. entities now falling clearly under regulatory bodies that the SEC can feel comfortable that they've got the custody thing figured out. Their exchanges, we can check into their exchanges once they're registered, whether it's Bakkt or Coinbase. We can get those information sharing agreements with them. They're not rogue type trading platforms. They clearly want to work with the regulators. Same with the Gemini, the Winklevoss twins trading platform. So they're all working towards that. And the reason they're doing that is they know there's big money that hasn't come into it, and they can't get the big money into the systems until they have regulated products. And the only way they can have regulated products like ETFs is if they satisfy and they tick the box. So ProShares has 30 billion under in ETFs. Direction ETFs has 14 billion. Van Eck has 46 billion. This other company, Granite Shares, has about 500 million. So there's a lot of money there. And what Van Eck just did recently, early October, they met with the new commissioner who was there. I think the last time they rejected an ETF, it was like a 3-2 vote. I'm not quite sure. But the head lady is leaving in December, and there's a new person there, and then they're going to appoint another one. They're thinking that the new people are more receptive to this. Not just that they're more receptive to it, but they actually have more information now. They have a better hand to play. And Van Eck presented in October their reasons why they should approve it. Basically saying they've solved a lot of these issues. There's more liquidity. You can get valuations better. You can get your information sharing agreements. There's different custody arrangements out there. And it's possible that on November 5th, they approve any one or all of these ETFs. Now, that would be a big deal. And if that were the case, then you would expect that Bakkt would also get approved and go live in December. And if you look at this chart here, I mean, it didn't take much. It took 4 weeks to go from 5,000 to 20,000. It's possible you might see, I'm not predicting it, I'm not advising you to go out, but, it did happen in the past. It's not like these things haven't happened. And this is actually bigger news and would create organic demand, because if you approve ETFs, they got to be funded if Bakkt is going to go live. Now, there's no guarantee. Maybe they don't have to be funded. If there's no demand for them, well, you can improve all the ETF you want. But I don't think these companies are in the business of creating ETFs and realizing, oh, no one wants this. I mean, you do have a bunch of them trying to get ETFs passed. I mean, you would think they've done their market research. They all can end up with egg in their face. Could be Starbucks, Microsoft, New York Stock Exchange, ProShares, Direction, Goldman Sachs, Van Eck, Coinbase, TD Ameritrade, Fidelity. They could all not know. They could all just clearly be missing the demand for this, and they're all just wasting their time. That's a possibility. I don't think so, but you have to keep that open. It's not like because everyone on Wall Street wants in on this, there's anything there. I actually think it's a combination of there's something there, but I think there's a thought that they can make this into something, that they can actually push this, they can sell this, and then it can sell itself, and so on. So that's the issue with the ETF. So there's a comment period, last comments through November 5th, but Van Eck has had its meeting. ProShares, Direction, and Granite Shares have presented their stuff. Coinbase they say that they've talked to BlackRock, who wants to do an ETF. We mentioned the Winklevoss twins. So if you imagine one gets approved, the competition for all these ETF companies, you know, the gold ETFs, you guys have watched me before in the shows. I show you there's, you know, dozens, not dozens, but there's probably 5, 10 of pretty big name gold ETFs. You would imagine you'd get the same. We've already got 5 pending here. And you've got, you know, Coinbase maybe, and Winklevoss twins, the Gemini, you know, so you would see the same type of thing. And ETFs are a big deal, and they, you know, if they get approved in the U.S., they'll probably have them in Japan and all over the world. Now, on the trading platforms, Goldman Sachs has been very interesting. They're not investing directly, but they have interests in things like BitGo with storage, Circle, which is a company, they're working on a stable coin that's been released with Coinbase. So Goldman Sachs is involved. Schwab has not announced a trading platform the way TD Ameritrade or Fidelity, a crypto trading platform like Fidelity or TD Ameritrade, but a Schwab member joined the Coinbase board. So clearly they're all looking at this. It's not, and it's interesting, no one's paying attention to this space because price isn't going anywhere. But price wasn't going anywhere, as you can see in that chart in the middle there, but things were going on behind the scenes. Price is only what shows up, and it's either from hype or as a result of all the work that's gone on behind the scenes. So you're seeing a bit, we may not see the price ever move up again, but we are seeing that leveling off period where nothing is happening in the price, but as I think you've gotten an earful of what's happening behind the scenes with Bakkt, with Fidelity, with Coinbase, TD Ameritrade, Schwab, Goldman Sachs, ProShares, Van Eck, Granite Shares, potentially BlackRock. All of these Wall Street entities, I think, want in. So that's what's going on. We'll have some clarity. By the end of the year, we will know whether Bakkt is live or whether we've got an ETF. But we'll also know if we don't have Bakkt and we don't have an ETF, we'll know why. And we'll know that it's either forthcoming or not going to happen, or it's not going to happen for a long time. Most likely, I say out of the two that'll happen, the ETF and Bakkt, I think maybe one of the two happens. Maybe both happen before the end of the year. Or neither happen, and then one of them happens in the first quarter next year, and by the second quarter, both have happened. Who knows? I can see a path for them getting shut down completely. I think that's less likely, and I can see a path for them getting approved. And I think once they're approved, I think it's hype action all over again. It's pumper city. But this time, the pumping is going to come from the professional pumpers, not the YouTube pumpers and the blog pumpers and the Twitter pumpers. Game over and game changer and making up stories. It'll be Wall Street made up stories about this ICO and that ICO. You won't be seeing YouTube videos on why this next ICO is going to the moon and you're going to get a Lambo. You're going to see PowerPoint presentations and investors being wined and dined to invest in all this stuff. Again, not investment advice, just my what I think is going to happen, because I think Wall Street needs it to happen. All right, let's see what we got in the comments. Let me get rid of all this here. If we got any comments, I don't know. Oh, wow. All right. Andrew, ETH is on hard resistance line as well. Yeah, all the major cryptos are on hard lines. That chart looks familiar. Did silver look like that a few weeks ago? Well, silver's been flat too, as you pointed out the other night, Shark here. It's been flat for the last 8 weeks or so. Elijah, blockchains will be broken in time. Well, you know, everything's going to be broken in time. We're all going to die. Eventually we'll have quantum computing. Well, what's interesting is known risks that have a period in front of them generally get resolved. I thought the mafia owned the New York Stock Exchange. Mystery versus mystery. Man, all these precious metal channels sound depressed and pissed. People would rather us fall back in time so they can turn a profit. Shaking my head. Yeah, well, if you've been with us the last few nights, I've been talking about how gold is money. Gold has been money for 5,000 years. Gold will be money, period. And I relate that to horses were transportation for 5,000 years. Candles were the way we lit our home. And indeed, if we do go back in time, because of technological failure, electrical failure, internet failure, well, yeah, horses will be transportation, primarily, not for what they're used now. Candles won't just be some atmospheric item that you have or some item you have if the hurricane goes through for a couple of days. But, you know, if we actually have a significant outage, an EPM event or something like that, EMP, I mean, candles will be light again. And horses will be transportation. And silver and gold will be money. But as long as the lights are on and the grid works, you know, they're going to be prepper items. And there's nothing wrong with that. Horses are valuable. They're just not primarily sources of transportation. Candles will clearly be valuable, but not just as a romantic dinner. It's going to be what you need to get your work done at night if you want to stay up and read a book or do something. Andrew, not private ones, Elijah. Well, even private ones, Andrew, can be broken. You can have a 51% attack by the miners. So, yes, but a decentralized blockchain is always more secure than a centralized one. Hedgehog, what happens to the investment you make, i.e. you buy in and don't spend it? If the price rises, do you get money added to your account? No, I think it's like a stock. So you're saying if you buy a cryptocurrency from your trading platform, it'd be you have to sell it to make the value. Now, it could be you have an ICO where you get a token that has some type of, I don't know if you'd call it a dividend, but you get something from it, or there's a fork. That would then be credited to your account. Just like if you buy AT&T stocks and you reinvest the dividends, it does get automatically deducted. But Hedgehog, if you want to sell it, you have to, the price has to be, you know, you buy it at $10 and you have to sell it at $20 or sell it at $5 in order to realize your investment gain or loss. Walden Tree, the digital dictatorship. You know, a lot of people are saying that. I used to think that, but it's not. We were already headed towards a digital tracking of everything anyway. Because even if cryptocurrencies didn't come along, cash has already been pretty much out the window. All of your stock trading is done digitally. It's all tracked, traced. People know what you bought and sold. They keep a record of all the stocks you bought and sold. Your house is on, you know, everyone knows who bought your house. It's all registered and everything. Your tax returns contain all of your information. Your bank account is all digital. So even if there were never cryptocurrencies, they were already tracking and tracing pretty much all your transactions, other than the cash transactions you might have made. But even then, you know, you go to your bank, you take it out. They noted that you took out $100. They may not know where you spent it, but they know you took out $100. So cryptos, I think they made people, they oversold the fact that they were private, but they also oversold that somehow that you were going to be able to be tracked and traced when you already are. Will Bakkt have its own currency? I don't know if Bakkt is going to use a stable coin like Coinbase has just introduced. They have their own US dollar coin. Gemini platform has their own US dollar coin. These are like Tether coins, but there's supposedly more comfort in them that they're actually backed by the dollars. Now, there are other stable coins that aren't even dollar-based They say they're even more stable based. They're algorithmically run. There was one company, I don't remember the name of it, but they were saying that it's more stable because it's the coin is based on an algorithm that keep it at a certain level. But it had a lot of investment in it. I think one of them was a big Wall Street company too. Walden Tree, just look at Europe. Yeah. Z-Spec, there are some good products, coins. Yes, and the good ones, if the SEC does its job right, they'll actually force the issuer of the coins, just like with an IPO, to explain what the coin, not just some white paper that some YouTube guy gets on there and says Lambo and Moon, but actually explains what it does under penalty of, not that we don't see a lot of these companies being prosecuted, but technically you won't be able to just make up stories and put it in an ICO document and ship it out like might have happened over the past couple of years when they weren't registered. The idea is the SEC is supposed to provide some level of investor protection. Walden Tree, there'll be many cryptos with one entity controlling the physical infrastructure they exist on. Well, yeah, that's the issue, is that if they're all run off of the internet, that is an issue. But that's true with the financial system as it is anyway. The SWIFT system, whatever the banking system uses, the wire transfer. See, I used to think that the cryptos were making it, we're ushering that in. It's already been ushered in. Whether you add on cryptos to the system or you change the system, we've already got a digital system in place. Hedgehog, can anyone answer my question? Did you ask one already? I think I answered it. Yes, what happens to the thing? Demana says, when Lambo? We want Moon, though. Yes, we want Moon. When Moon? Moon is the answer. That's right. When you buy something, you don't have to do anything. The answer is you just wait to land on the moon, and when you hit the moon, there's a Lambo waiting for you. You don't have to do anything. You just call up the broker and you say, I want crypto, and he places your order. You don't send him any money, and then like in a week, you're on the moon with your Lambo. Welcome to the future. I like your open-mindedness. CEO of Visa admits they may use crypto. Well, I'll tell you, Demanis, as I mentioned at the start, you might have missed it. Most people, what they know about crypto is what they need to know to be against them. That is all I need to know. I heard on a show that cryptos are the mark of the beast. I know that cryptos are all going to zero. That is why I am buying gold and silver, to hold on, because if you don't hold it, you don't own it. I mean, it's this NPC mentality that they know. It is invented by the CIA. That is all I need to know. They are going to round everyone up and arrest them. And then your silver is going to go to the moon. And that is when silver will be worth $3 zillion, because silver is the most valuable thing in our lives. Yeah. And the Bitcoin people make similarly ridiculous statements too. And you have to analyze them. And generally, when people make ridiculous statements, they're selling something. They're selling cryptos. They're selling Bitcoin. They're selling silver. They're selling gold. They're selling newsletter. I'm not selling anything. I'm just trying to exercise my analysis here. Hedgehog. So if I buy a coin for $6,500 and it rises for $20,000, do I get the profit? Yeah, if you sell it. You get nothing if it goes to $20,000 and then it goes down. If you have to sell it. No different than if you buy a stock. If you buy a stock for $30, it goes to $100. Unless you have an order put in. Now, there are platforms where you can say sell it when it gets to $100. Or you can have a stockbroker. You can say, here, buy me this. Most people don't do this. They place the trades electronically, but you can probably find a stockbroker where you can buy stock and say sell it when it goes to 200. It's the same with a crypto. You can probably buy it and then sell it when it goes to 200. You say crypto 3 times in the mirror and a Lambo appears in your Binance account. That's right. Mooncoin. You know, I was doing the NPC before they came up with the NPCs, because I used to read all of these comments, and they clearly were all the same. The COMEX is going to default. There is no gold at Fort Knox. They repeat this stuff as if they just heard it. And then they insist on it, that the dollar is going to collapse. End of dollar hegemony. Gold back yuan. Game changer and game over. Deutsche Bank has $1 billion worth of derivatives, and they will collapse the system. It is unsustainable. All right. Crypto, green, Lambo, please. Now, here's a question for everybody. If you if you invested in cryptocurrencies, I don't know, let's say you invest today, and let's say you buy, I don't know, you buy one of them, and let's say it goes up, let's say you invest $100, and it goes up 10,000%, and you've got your $1 million. Do you buy a Lambo? I know I wouldn't. Would you buy a Lambo if you made $1 million and a Lambo costs, I think, $330,000? And let's say you made $1 million tax-free, I mean, it's post-tax, so you have $1 million in cash. Are you going to go out and buy a Lambo? I am not. Joker says, oh, yes. And Andrew says, F no. I wouldn't. I would have to make, I think I'd have to make $30 million before I even think about blowing money on a Lambo, because I don't even want a Lambo, so I don't even know if I made 30 million whether I would want it. I probably would have to make 300 million, and then I would buy a Lambo. So that's not gonna happen. But I don't know what the when Lambo is, and I wouldn't want to go to the moon either. So I'm glad I'm not don't have those aspirations. Flame Tongo. If leverage it on Bakkt. Okay. Flame Tongo. If crypto goes down, you lost collateral. Oh, well, he was saying to Andrew, if you leverage it. If crypto goes out, you can pay back with just the part which you collateralize. That's right. Joe Lazaro. I find an undervalued asset to buy. Oh, so if you made that kind of money, you wouldn't buy something to treat yourself. You'd buy something cheap and try to make more money. Well, that's smart. That's there's a joke about that, but I can't tell it online. Okay. You would have no way of figuring that one out, so that's good. All right, can't get myself in trouble. By the way, sign up at BitChute just in case. You never know what happens on YouTube. I may say something by mistake, inadvertently, or on purpose. There may be comments that I'm aware of that aren't good, and they decide they're going to shut you down. So if you go over to BitChute, I have all of the videos backed up. I'm not planning on doing anything to get myself in trouble, but you never know. Or they may just, you never know. They may break Google into a zillion pieces. They may shut down YouTube if it's not profitable. Who knows? It's always good to be on other platforms. And essentially, the best place to be is on Smaulgld.com, because at least that should be the one that lasts the longest. Smaulgld.com. You go there, you subscribe, you're good to go. Oh, Stacking as I used to be a valet dryer. Lambos really aren't that nice. Well, I'd imagine they're not comfortable. I mean, I think they're supposed to be like a race car, so I wouldn't expect it to be a nice car. I think I've never been in a Rolls Royce. I've been in a Jaguar. Never drove one. I drive the cheapest of cars. I don't think I've even... The best car I've ever driven, you're going to laugh, was a rental car. It was a Chrysler 300. I thought that was the most luxurious car I ever drove. My Aston Martin stacking assets. Okay. Joe's greedy for more gains. But maybe I'd buy a Tesla. Not the right time, man. Don't make that joke. I don't know what the joke was about. Not the right time. The Joker. What's your prediction for the next year's all asset classes? I don't know. If I knew that, I wouldn't be spending hours online doing YouTube videos. I'd be collecting my money, so I have no idea. Andrew, are you going to use Bakkt? You're asking me? I don't really even know what it is other than what they say it's going to be. I mean, I haven't seen an interface. I would imagine that Fidelity or TD Ameritrade or Schwab, I think that's when I would be, if I was inclined to do something, the barrier to the friction to do it would be gone. If I had an inkling and I had a little money and I wanted to invest and I was in a Schwab account and I probably would very easily use their crypto service. And I think that's what they're expecting most people to do. Just sprinkle a little foot in the water. And I think the institutions are going to put a little foot in the water. But remember, institutions, when they put a little foot in the water, it's $5-10 million. It's not $100, $200. Andrew, well, it sounds like Bakkt is the first iteration of stocks on blocks. Again, I mean, everything I said to you that they want to do, I haven't seen how they're going to do that. They claim they're going to have all these platforms. I can tell you what an ETF is going to look like. You know, Van Eck is going to come out and they're going to call it, you know, BTCX or something. And ProShares is going to have one called ProShares Bitcoin. I don't know the names of them. And those are going to be easy to buy. There's going to be a symbol. And you go into your Schwab account and you buy a share or whatever you buy of it, of the ETFs. I don't know how, what the interface of Bakkt is going to be like. So I couldn't tell you. All right. What else we got here? All right, well, that looks like the end of the comments. I want to thank everyone for joining me tonight, and we'll see you tomorrow night. Oh, let's say I'm trying to help my folks make future decisions. Do you think the market will maintain? I have no idea. And if not, what would a wise person do to help themselves out? Well, don't ask me. No advice, of course. Thanks. I really don't know. All I can tell you is what I do on this show is I put together what I see happening. Where it goes and what the impact of where it goes means, who knows? I mean, I think I do a good job of putting together what's happening and maybe what might happen from that. But then you got to, what's the impact on price? Who knows? And then there's other things that can happen in the interim. So I'm just here to provide my 2 cents in analysis. That Bitcoin chart might break down hard. Might. I mean, it could be holding on and they'll just say, well, you know what? Screw it. It goes down if there's no impetus for higher prices. That's true. It could really fall off the table if none of this stuff gets approved. All right, everyone. Thanks for the stream. I like your point of view analysis. Thank you, Andrew. Thank you, everyone, for listening. Make sure you go over to Smaulgld and subscribe, or at a minimum, send me $100. No, at a minimum, at least like the video and subscribe to the YouTube channel. But that doesn't really do you any good because you probably don't get the alerts anyway. But sign up on the Smaulgld site and or at least the BitChute. Get an account over there. And yes, you can donate and buy a mug. I mean, mugs can't go to zero. Go to the Smaulgld site, pick up your mugs, and check out the video on the 18 reasons to buy and hoard mugs. I think that'll be it for tonight. Thank you, the Joker. All right, everyone. Good night.